This conference will now be recorded.
Yeah, good afternoon.
Good afternoon. Welcome to all of you here. We have a wonderful panel today. We have Dr. Koopman, we have Kamble, we have Dr. Shuklar, all very, very learned and very experienced administrators and economists with us today who are going to talk to us about the impact of COVID, which we were deciding not to talk about it, but over the last 4 years or 5 years, we've been doing so many Vision 2020, Vision 2020. None of us ever envisioned Vision 2020 would be like this. I don't think we even dreamt about such a nightmare that would happen to us in our life. But they say for every calamity, there is a reason, and we must find what it is that the world wants to teach us. So I would like to start this meeting with requesting Mr. Vijay Kalantri, the President of India Association of Industries and the Vice Chairman of Workplace in Mumbai, to please deliver a welcome address, and then we can start with the panelists about the impact that they foresee for the economy, not just in India, but across the world. Thank you.
Dr. Harshdeep Kamble, our Development Commissioner Industries and Secretary MSME Maharashtra Government. Dr. Robert Koopman, who is a Chief Economist to WTO, and Dr. Shuklar, who is the economist with Mahindra and Mahindra. So we have three learned speakers today with us. One who is into administration, second who is into trade and trade development and world trade we are talking about, and Mr. Shukla, of course, in the private sector, but definitely one of the best groups which have been passing through a rough time because the vehicles and all are going differently, but the tires are moving. So things are moving very well, and Mahindras don't have plants in India, but across the globe, and they work across the globe. Welcome, sir. We are talking about COVID and aftermath, and we are talking about revitalizing the economy in view of the COVID. There's a great opportunity in this. I always see opportunity in crisis. If the crises are there, you should not get bogged down by the crisis. You should see for a better day, better opportunity. If you get bogged down, you will never do anything. And you have to say what to do. Now this is COVID, now this is this. So let us not talk all that. Let us talk what better things can be done now and onwards. And we took that up. All the manufacturing, as we talk about world over, is impacted. Economy is impacted. Global recession, we talk about. Slowdown in India, we talk about. All these are there. All these factors are part of the economy, and all these factors will confront you at all the times. But there's always a ray of hope, silver lining in all the crises. And I feel that we should talk about what is the silver lining and opportunities for us rather than we talk about what is not there for us. I feel that, sir, Mr. Kamble, you being from Maharashtra government, I have one or two good suggestions, and they are the suggestions which can take us a long way. One is that we create 5 zones in Maharashtra. One for automobile, one for textiles, one for agro-food, one for IT, and one for electronics and hardware. And that can also include semiconductors. So these 5 zones should be part of the DMIC which you have. And every, like Bindis, something can be there, Raigad something can be there, in other Nasik zone something can be there. So you can divide as you want, and MIDC could monitor those, but it should be on the war footing. It should not be a long-term project. It should be on the war footing without any if and buts. And you should have no permissions in these zones for people who are putting up factories, whether it is domestic investor or a foreign investor, except the environment. In case of environment, you can have a guideline. Once they follow that guideline, you give the permission like a blanket, online permissions. And the local issues, local authorities, all you should say, keep off these zones. I will, and for 5 years,
ease of doing business.
Totally ease of doing business. And talking about Prime Minister's slogan, minimum minimum government, better governance. And no local authority, no union, minimum daily wages, whatever is confined by the government, whatever is prescribed with gratuity and whatever statutory dues they should pay. Besides that, no other interference by any authorities in those zones. And I can tell you, sir, this 5 trillion, 1 trillion economy, what Maharashtra is talking, and 5 trillion, what India is talking, is not far away. This model can be followed by various states. And whatever policies you announce, by way of incentive, suppose you give, they should be given on the spot rather than having a policy. Then one has to go to revenue department circular, one has to go to finance circular, one has to go to other department. No, sir, it should be along with those circulars. Like Chandra Babu did once earlier, I have seen him working, and Mr. Narendra Modi in Gujarat used to do. He should say, this is a paper now, but this paper you don't come to me or my officers. This is all
point
over.
well taken. Point well taken.
And these are what, this is what small way. No, and you say no bureaucracy, nothing. You are one of the commissioner. You will become overall in charge of that, like ships type. And all the powers will be vested with you, not with any minister, not with anybody. All department powers will be with you. So that is the way we will work. And I think India will flourish, will do better. World is looking at India. But if we miss the train, like about 6 months before we missed the train, there were 18 companies of MNCs which came out of China. They went to Vietnam and Bangladesh. They said in India, a lot of bureaucracy, sorry to say the word, but they said a lot of bureaucracy and red tapeism. Ease of doing business, talking and indeed, like what you policy you make and implementing in letter and spirit is what people want. With these few words, I thought that let me, other people will dwell on various other subjects, and we have various learned speakers on different subjects to talk. So I hope we will have some good ideas and thoughts which will be good for Maharashtra, India, and good for all of us. Thank you very much for giving me this opportunity to speak to you.
Thank you, Mr. Kantri. What was that?
I don't know.
Yeah, ma'am, please continue. Ma'am, please continue.
Okay. I now would like to request Dr. Koopman, the Chief Economist of the World Trade Organization, to please share with us the global perspective on COVID-19 and its impact on the world economy. Great. Thank you.
Thank you very much. It's a great honor and pleasure to be able to share some thoughts that we've been developing here at the WTO on global developments, both for GDP and trade. Give me a second. Should be able to start.
Yes, yes.
I presume you can see my slides. Great, thank you. So if you take a look at projections for 2020 and 2021 for trade, what you observe is that there's a significant decline in expected trade for 2020. We run two scenarios. I just want to confirm that you can hear me okay?
Yes,
I
sir.
think everybody needs to put off their mics.
Okay, as long as you can hear me okay. You'll see that we expect a significant decline in global trade for 2020 and potential for a recovery in 2021. We run an optimistic and a pessimistic scenario. In the optimistic scenario, we see trade declining in volume terms for goods only about 12%. In the pessimistic scenario, we would expect to see trade decline by about 32%. Also, if you look at this chart, what you'll see is this is the trend in trade growth prior to the great financial crisis of 2008, 2009. And it's very clear that since the crisis, we've broken with that previous trend and we're on a much slower trend of trade growth. And a big question will be, after the recovery from this COVID crisis, will we return back towards our more recent trend, or will we remain well below it? And that's a question that's very difficult for us to answer, and we'll only know in the next year or two. There is a good reason for the difference in trends here. The first long-term trend that we observed with this fast-growing trade largely represented the opening up of India, China, the European centrally planned economies, massive liberalization from multilateral regional trade agreements, unilateral liberalization, technological change. Many of those factors are no longer present and available to drive that rapid trade growth. But this trade growth is probably slower than it otherwise would need to be. Since the great financial crisis, we've had relatively slow economic growth and relatively weak investment. If it wasn't for slow economic growth and weak investment, we would expect to see trade growth somewhere up in here. Now I'll go to my next slide. We predict that, or we try to forecast changes in GDP. And you can see this is from a large-scale simulation model that we use. And you can see that we, in an optimistic scenario, which we call V-shaped in this particular chart, we would see India's growth declining from its trend growth, which is over 6%, by 5.4%. So in this case, we would expect India to have still positive growth, but relatively weak positive growth in 2020 for GDP, with a recovery in 2021, moving it back up into the range of about 6% growth. However, in other scenarios, you can see that we would expect a much more significant decline from trend growth. And the recovery looks better, but it's still not as strong as if it had remained on trend. And for the globe, you can see for the world, we expect about a 5% decline in GDP from trend. That translates into about a 2.5% decline from the previous year. The IMF came out with its World Economic Outlook forecast shortly after we did our GDP forecast. And instead of 2.5% decline, they predict a 3% decline. And they actually reflect an optimistic scenario with significant downside risks. A major concern going forward, particularly for trade, since investment is a big driver of trade growth, UNCTAD has released its forecast for global FDI trends, and we see significant weakness and significant decline in foreign direct investment, as well as significant weakness and often negative numbers for domestic investment. And investment, whether it's FDI or domestic investment, tends to be very, very import intensive. Investment goods are often imported. If we compare the performance for the forecast period with the great financial crisis, this is the ratio. These numbers here represent the ratio of trade growth to GDP growth, just goods. And you can see that back in the 1990s, we had a number of years where trade growth was more than double, sometimes 3 times higher than GDP growth. That represents that great opening up that I was talking about, and the multilateral, regional, and unilateral liberalization episodes that fed rapid trade growth during this period with high investment and high foreign direct investment. The great financial crisis saw trade declining by 6 times more than GDP. So this trade elasticity was 6. And in our current forecast, we're expecting a trade elasticity of just below 5, or just below 6, around 5. It depends on the scenario. If you're interested, you can find on our website a technical document that describes how we generated both the GDP and the trade forecasts. But I'd like to highlight here that some of the components that we captured in the modeling scenario had to do with reductions in labor supply, shocks to demand and output. So this is a reduction in factors, so fewer workers able to go to work. This is a decline in output, partly because of the decline in workers able to go to work, but also supply chain and other related shocks and then a decline in demand because workers have less money, their households are locked down, they can't go out and buy. So we incorporate these scenarios into our model. And then we also reflect higher trade costs, that it takes goods longer to get from one point to another. And there are estimates of what the tariff equivalent of that is. We've observed significant increases in the price of air cargo. We've also observed the difficulty in moving people around, mode 4, and those costs have gone up very high, and you can see that we expect those trade costs to go up by about 23%. And that reflects also specialized equipment. That's equipment like computers, smartphones, chips, anything that goes by air cargo. And this is largely as a result of the significant decline in air transport, civilian air transport, which reduces the belly cargo availability to move those goods around. In the end, we end up with about a 3.5% tariff equivalent from the increased trade costs. With global average tariffs at around 8%, this represents about a 40% tariff equivalent increase. The contribution of these different shocks to exports, you can see that we see that trade costs, the contribution of the rising trade costs to the decline in trade, it represents in an optimistic scenario about 34%. So 34% of the decline in trade is due to the rising trade costs, whereas the reduction in labor supply is about 21%. And this works its way through the different scenarios with trade cost contribution declining and the GDP shocks and the supply shocks and the labor supply shocks having a greater impact through the modeling. So what are we observing right now? We see that about 80 countries have imposed export restrictions. That number's actually gone up. These export restrictions disrupt supply chains. They raise costs in other countries. They can also raise costs, by the way, in the country imposing the export restriction. They discourage investment. They invite retaliation. And we've had a very real experience with this in the past in 2007, 2008 with food export restrictions, which dramatically increased prices and volatility. Now, the WTO agreements allow for these kinds of export restrictions as long as they're temporary, targeted, time-limited, and transparent. And the idea is that they are removed as soon as the crisis is ended. And you can see that there's a very significant international reliance on trade for many healthcare-related goods. So what's the role for trade policy and the recovery? Keep supply chains open, keep trade lanes open, find ways to facilitate the movement of goods across borders, particularly land related. Keep trade finance going, enable FDI expansion, and support MISMEs in trade. Now, I'm going to close with this slide. And how does one mitigate the risks of pandemics in the future, or even other potential crises in the future? And essentially, oops, I'm sorry, I'm going to go back. Essentially, firms, households, and governments are going to need to evaluate a risk versus efficiency trade-off. For firms, the risk for firms is many firms use just-in-time inventory, and they rely on domestic and international supply chains to provide parts and components in order to be able to produce their goods. They're going to have to think about their just-in-time inventory, and this may result in many firms deciding to increase their inventory carrying for critical parts. And I mentioned it's both domestic and international supply chains. We have numerous examples where inventories and supply chains on a domestic basis have been dramatically impacted as a result of hurricanes, floods, fires, industrial accidents, those kinds of things. But this pandemic is clearly going to get firms to rethink their just-in-time inventory and very thin inventory coverage. They're also going to be thinking about diversifying their supply chains, and they're going to be thinking both domestically and internationally. And they're also going to be thinking about their production processes and probably how to reduce their reliance on humans through automation and digitization. So firms will be thinking about this as a risk versus efficiency calculation for them. Governments are also going to face a similar calculation. How do they manage for demand spikes above average supply? Almost every firm out there produces output based on expectations for average market conditions. When you get a pandemic, you get a spike in demand for critical goods, so let's say ventilators, vaccines, things like that. But they're a spike, and so supply is not necessarily calibrated by firms to meet those demand spikes. You can get demand spikes from other reasons in non-critical goods as consumers decide to stockpile what they consider to be essential products at home rather than leaving them in the stores on the shelves. So governments are going to have to think about how they manage these demand spikes. I think they're going to have to deal with things like building and managing emergency stockpiles in ways that taxpayers and citizens can afford and accept. And I believe there's a role for trade in that, because trade allows you to build those stockpiles efficiently and effectively. But they'll also need to be thinking about more flexible domestic and production arrangements where they rely on both domestic and international production as insurance agreements to meet these kinds of spikes in demands. I think we'll also see digital aspects for tracking and tracing in governments to be able to manage health population developments, health developments within the population. But there's a lot of uncertainty here because there's no guarantee that the next pandemic or crisis will necessarily be a respiratory health issue. It could be some other kind of health issue, or it could even be a climate-related health issue. Households, they're going to have to be thinking about increasing the ability to do remote work. They're going to have to worry about things like privacy if there's tracking and tracing, the ability in social distancing to earn income, maybe through remote work, and how to access critical services such as education and healthcare while they're either isolated or remote, and that implies big demands on digital services. And this also applies to the ability to access or purchase necessary products while isolated. So I'm going to stop there. Thank you very much for your attention, and I'm happy to take questions later. Thank you.
Thank you, Dr. Koopman. I just forgot to mention one thing about Dr. Koopman. I said that he's the chief economist of the World Trade Organization. He's also director of the Economic Research and Statistics Division of the World Trade Organization. No wonder we got such a wonderful presentation from you, sir. Thank you very much. I now would like to invite Dr. Shuklar, the chief economist of the Mahindra Group, to please share his perspectives on the COVID's impact on India, mainly on India and the world also. Thank you.
Hi, good afternoon, everyone. Thank you, WTC, for having me over today. And a very warm welcome to all the participants. I think we got a very good overview from Dr. Koopman. What I'm now trying to do is give you an overview of the Indian economy, the top down for India macro. Can you all see the slide and also hear me properly?
Yes, sir. Yes, sir. Please go ahead.
Right. So like Dr. Koopman mentioned, he showed economists, you can say that they love this alphabet soup, right? You would have seen him talking about the alphabet V, U, and L, and all that. So I'll just take one alphabet out of that and begin this presentation. So I'm just misquoting Shakespeare here. I'm just saying to we or not to we, right? This is the first synchronized global recession that most people believe it will be. I just want to share the IMF World Economic Outlook forecast here. If you see the slide for 2020, they call it the Great Lockdown. What you'll notice is they believe that India and China are going to actually see positive growth, whereas everybody else is going to see a decline. Now, this is based on certain key assumptions. They believe that the worst impact of the virus will be in the first quarter alone. Thereafter, things ease out. Now, we all know that this is a hope that we all believe or really believe in, but the eventual reality may not really be so. And therefore, if you see what we are trying to say here is, if you go back to the global financial crisis, even then, India and China were the ones which witnessed positive growth. And even in the great lockdown, according to IMF, these two countries are likely to show positive growth. Now, why did I talk about the alphabet? Let's look at the world. 2020, IMF believes that there will be a minus 3% growth. And then coming to 21, it will be nearly 6%. So there is a 9% swing in global GDP. Similarly, if you talk about the United States, the numbers are -6, close to -6, which is 5.9, going to 4.7. Again, a 10-11% swing in just 1 year. Similarly, for the euro area, which IMF believes will degrow by -7%, 7.5%, but will grow to 5% next year. Interestingly, for India, the IMF says that India will grow at 1.9% in 2020, and in 21, it will grow 7.4%. So I think a large part of the forecasters currently fall under 0 to 2% for India. IMF seems slightly optimistic. Now, here's the framework for all of us to understand the hit on consumption. We all know that India is a consumption-based economy. 60%, 65% thereabout is private final consumption. And I just want you to understand this breakup so that we can arrive at some guesstimates of how badly we'll get hit. So if you look at what I'm showing here is that 50% of the private final consumption expenditure or private consumption is services. 39% is non-durable goods, which is more like food and beverages and those kind of things. So 75% of the non-durables is things like that, which will not really get hit so much. And the remainder 11% are durable goods and semi-durables. Now, one distinction I want to bring about here is that in any such shock, the decision to buy durables or semi-durables can be postponed, right? So the demand gets postponed to the second half or the next quarter or some period like that. However, in case of services, the demand gets destroyed. So for example, I wanted to hire a taxi or watch a movie or go out and eat in a restaurant. That demand gets killed. It cannot come back. It's not postponed, it will get killed. So you can clearly see what are the kind of activities that will get hit if we remain under the lockdown. Now, please remember the lockdown by itself is not a cure for the virus. It is just delaying, buying some time. And therefore, we need to understand what it can do. What can the cure do for us in terms of consumption hit? This is how each one of us, all Indians, spend our money on. So these line items which you see now shaded in pink are the ones which will get hit. So, I mean, starting from food and beverages at the top, right to the bottom, which is healthcare, communication, education, restaurants, and hotels. So, essentially, Indians spend about 1600 odd billion dollars on these items. And what we believe is 30 to 35% of this is likely to get hit. So roughly about 470 odd billion-dollar worth of consumption categories will get hit. And these all include things like transportation, purchase of vehicles. I think initially in the introduction, it was mentioned that autos have been hit, transport services, recreation and culture, communication, and things like that. The only exceptions here are healthcare, which is about $71 billion, and education, which is about $67 odd billion. Apart from that, you'll see restaurants, hotels, and all these uh, consumption of all these services getting badly hit due to the lockdown. Now, there is one more aspect of the lockdown. What has happened is even manufacturing has been shut down. And what we've tried to do is just try to calculate the cost of shutdown of manufacturing across India just for 1 month. It is going to cost us about $31 billion, just 1 month. And you can extrapolate that if this shutdown is going to get extended, just from sheer manufacturing part, how much is it going to cost us? And I've already told you the cost in terms of consumption. Similarly, there are other costs in terms of exports, etc. So, I mean, if you think about it holistically, we are losing significant amount, and a lot of people have tried to calculate that amount. We believe we could lose up to 8% of GDP each month in the worst case. So you can extrapolate if it gets, say, stretched to 2 or 3 months or maybe more, you can put a number to the cost that we will have on the GDP. Now, coming to forecasts, I think a lot of these forecasts are still yet to factor in some of these second order impacts. And you can actually see the likes of S&P Global, CRISIL, Moody's, and all these people, they are in that 3.5% number. Fitch has come out with a number which is 0.8% just yesterday. So I think most people are still revising their numbers, but I think it would be fair to say that India's GDP growth this year could be in the range of 0 to 2%. And why am I saying that? Is because a lot of the government initiatives, right? We've seen fiscal policy and monetary policy measures here. In the first round, the government initiated fiscal measures totaling 1.7 trillion, which included cash transfers through PM Kisan, 500 rupees per month to women, etc., and also related to food security. And there were other measures which included insurance for health workers, etc. At the same time, we've seen 2 phases of monetary reaction where the RBI has cut rates, interest rates, both the repo and the reverse repo, the CRR, and they provided liquidity. And they have also given forbearance to various segments. So I think if you look at what the government has done, it is clearly not enough, and there is more coming. So I think what we are all looking at over the course of the week or the fortnight is a package for MSMEs which are going to get hit. Also on the anvil is a sectoral relief package for some of these sectors which I said will get hit directly. You know about the airline industry, retail industry. Some of these sectors are going to get directly hit, and that could be pretty bad. And therefore, this is not over. But I just want to point out one thing. Please don't compare or get carried away by the numbers that you see from the US and UK. So, for example, the US is doing 18% of GDP kind of a stimulus. UK is doing 15%. I think there are some anomalies that you need to keep in mind. When you're comparing India with the US, please remember, India does not really have a reserve currency, and the world is not dying to buy our paper or G-Secs. Similarly, when you compare with UK, please remember what most people count in that stimulus package is the 350 billion pound package, which is more a credit guarantee. Now, all of that cannot be really counted. It's not correct to count that. So therefore, the 1.7 trillion rupee worth of measures that the central government has announced may not seem enough. But what I'm saying is, we are expecting more. This is not done yet. We will probably see 2 more tranches, which will provide relief to MSMEs and sectors. And therefore, this is something that we will have to continue to monitor. Now, having said that, let's look at what could be the impact on sectors. On the left side, you can see the sectoral resilience, and on the right side, you can see revenue impact. And the size of the bubble tells you how big is that impact. So you can see the extreme right, gems and jewelry, automobiles, and stuff like that are likely to get hit, this top right quadrant. And as you keep coming down towards the extreme left, you can see some of these which are not likely to get hurt very much. So for example, just look at the extreme left: IT, telecom, mobile operators, food supply, pharmaceuticals, agrochemicals. These are relatively better off or more insulated. But as you move towards the right-hand quadrants, the top ones are impacted the most. All these, when I spoke about, these are some of these are negative. These will entail a huge cost. Do I see any positives also from this crisis? Like it was mentioned in the beginning, let's not waste the crisis. Uh, I call it the AC era, after Corona era, right? I think just like what happened in the United States, the Great Depression saw the United States get its social security. We may also see something which will be probably DBT led, direct cash transfers led, and this could be a quasi UBI. And please remember, even Western Europe got its welfare system post World War II. That is number one. Second, we could see a diversification out of China. The world now will definitely want to diversify. In finance, we are all taught that you should not put all your eggs in the same basket. But somehow, when it comes to global trade, everybody put their eggs in the Chinese basket. And now everybody is ruining their decision. I'm very sure that over the medium to longer term, India can benefit when the dust settles. You would have seen news articles where Japan has come up with a $2.2 billion fund, which will facilitate movement of industries out of China. The third positive that could emerge is anti-wartime or a flexible economy, right? I mean, the GVCs, the whole system became just in time. And I think you will now probably see companies and economies moving to an anti-wartime or a flexible model where you can scale back production, which doesn't really hurt the economy or the company or the sector as much. The fourth, and I think everybody is seeing that out of your windows, uh, this can become more sustainable. I mean, look at the pollution levels, etc. I think this is something which will probably make us more responsible towards climate, and the economic growth models will probably weigh in favor of sustainability as well. We will try to opt for a model globally which is more sustainable. And the fifth is we will probably start valuing cooperation more than competition and prioritize well-being of people rather than just GDPs. So I think these are some positives that you can actually see coming out of the crisis. What I'll do is I'll stop here, and probably towards the end of the session we can have questions and answers. Thank you so much for listening to me.
Thank you, Dr. Shukla. I think I should also mention that Dr. Shukla is part of the Niti Aayog panel of economists, and he's also been a part of the Planning Commission. He has also been an expert on the external expert on the World Bank's report on the development report of Maharashtra. So thank you, Dr. Shukla, for a wonderful presentation. I would now like to invite Dr. Harshdeep Kamble, the Development Commissioner Industries of the Government of Maharashtra, a very dynamic officer who has always been very supportive of MSMEs. So I would now like him to take the floor and talk to us about what he plans or what does he foresee for Maharashtra. Thank you so much. We can't hear you.
Hi, good afternoon, everybody. Can you hear me now? Am I audible?
Yes. Yes.
Yes,
Yeah.
yes,
Yeah.
yes, yes.
Yes,
Thank
sir.
you, Rupaji. Yeah, thank you so much for giving me this chance to interact. And it was a wonderful presentation by Dr. Koopman and Dr. Shukla. So we talked more about world economy, and so Dr. Shukla gave us quite an interesting view about how it is going to be in India. So I think I should start with a positive good news that the monsoons this time in India are going to be very good. So, because every time now we are used to this COVID number of cases, how many infected. So here, I think that there are some positive things in this time of darkness that we have to focus on. And as it was said in the presentations also, that India has a lot of chances to grow in next 2 to 3 years of a time. Although economy has been hit, the world economy is being hit, and the trade, as told by Dr. Koopman, is maybe reduced down from 15% to 30%. But having said that, it has been reported, and you are well aware now that the Indian economy would grow to like anywhere near to 2%. Even this worst situations and 2008-9, which was very much told us, very much was conveyed to us by Dr. Shukla, that in 2008-9, when there was this economic crisis, then also India and China were the countries. So that is a good news. Another good news is like people are taking interest in India. Like just 3-4 days before, Facebook invested around $5.7 billion in Reliance Jio. So India, I think, would be kind of an hotspot, not for Corona, but for the investment. So having said that, I would say that since this is an economic crisis, and of course, it also involves the health of the public. For government, health of public is of prime importance than the health of economy. When it comes to a crisis, it is health of public that takes priority, and later then we can think of health of economy. So we are now in that situation where we are taking utmost care for the health of public, and slowly we are also trying to take care of health of economy by opening slowly. As you are aware that in India, we have started this lockdown. In Maharashtra, it was started like on 20th of March. In India, now we have started opening of the industries as well, although it is extended, the lockdown is extended to 3rd of May. But we have started opening up of the industries. So, and we, of course, the number of industries that has really started, although after this opening up is a little smaller, but we have been receiving many queries, and then people have developed that kind of a, good feeling that yes, something is being started rather than everything being under lockdown. So having said that, since this is an economic crisis, so the first thing in any kind of a crisis and is survival. So I think now every company, let it be a mega company, big company, or let it be an MSME, the first thing that comes to my mind is that survival is the thing that we should concentrate on. And when we talk about the survival, then basically we have to concentrate more on local markets, because that is what is available within our vicinity as of now. And when we are able to survive through this crisis, of course, government would definitely help in that. When we are able to survive through this crisis, then side by side we would also think about longevity of this business of each one of you. And then when we talk about the longevity, it means about the whole country extending towards country. Then also it means that we also look at global side. Exports would of course be a part of that. And then the third thing that comes to my mind is profit. So in business, normally we say that we take profit as a first element, but in this crisis, I feel survival, then planning for the longevity, and then profit could be line of action. So having said that, when we come down to India and the scenario that had been told to us by Dr. Shukla and Dr. Koopman, I would like to say that now India has a quite a lot of opportunities. I feel that we can become kind of a manufacturing hub, because every other country than China in the world is looking for some kind of an alternative. As it was rightly said, that nobody wants to put all their eggs in the basket, and it was wrongly put. So now we have this other countries who are looking for where could they go, and I believe that India is a place. And of course, being a Industries Commissioner of Maharashtra, I would say that Maharashtra is the place for any kind of investment, because we have one of the best industrial infrastructures, and Maharashtra contributes to 15% of GDP of the country. So therefore, we have come out with some good policies also, and Government of India, of course, will certainly give some kind of financial incentive, as well as ease of doing business, as was mentioned by Mr. Kalantri. Sectors which we are looking at for policy incentive is auto sector, steel sector, textile, agro processing. So these are the majority of the sectors, and of course pharma. As you know that India, there is a lot of queries from other countries, and then we are supplying medicines to nearly whole of the world, and India is also called as a pharmacy of the world. So that is one sector which is going to develop. So now also, when I was speaking to Indian Drug Manufacturing Association's units, so they said that they have a lot of orders, only there are some issues of this transportation, exports. So those are being also worked out and have been eased out quite a lot as of now. So pharmaceutical sector is one area which government is also supporting already. As a policy initiative, Government of India has come out with a policy wherein we are going to have a big pharma parks in India, and that would also produce chemicals. These all chemicals which are required for API, which are required for bulk drugs. We would now try to produce it in India, because all this chemical market and factories, it has gone to China, and from there we import here, and then we make the medicines here. I think that is one very good step which has been taken by the government for pharmaceutical sector. And then there was a talk about auto sector also. So Maharashtra is one of the major automobile sector, and we have one of the best auto sector here in Maharashtra, and we are also largest consumer of vehicles in India. So having said that, there is a talk that auto sector would further go down. Yes, I do agree with that, but there is another silver line to it. I feel that because of this corona, there are some fears that have been instilled in the mind of the people. So many of them now would not like to travel by a taxi. If they want their family, they would like to have a small car now. So luxury cars may not see a rise, but I foresee that there would be some increase. There would be slight increase in buying of the automobiles, like which are the cheaper ones. So you can travel, you yourself, your family can travel in that. That is what I foresee. So if we can think of such kind of an innovative ideas and then focus and market these, I think this crisis can also be turned into a small opportunity. And of course, for auto sector, it is one of the big sector wherein large MSMEs are involved in that. It also supports large MSMEs which are involved in engineering sector. So government, of course, is going to support auto sector. Then another sector which we can look at is steel sector, which has a lot of potential, and there is a lot of demand now. There would be a demand generated from other countries, that instead of taking from China, they would look at India. So that is one sector which we are looking at to incentivize. And for this, government would come out with big infrastructure projects. So like we have national highways, then we have housing sector to look at, which can consume a lot of steel. And that is one sector which we are positively looking at for incentivize maybe in their capital infusion, or maybe giving them financial incentives which is based on taxes. And for that matter, let me tell you that Maharashtra offers one of the best industrial policy where we offer incentives which are based on gross based and not on net based. So that is one such kind of offers, incentives are being rolled out now, which should be good for industries to pick up. Of course, this will not happen in a month's time or 6 months time, we don't know, because the spread of corona can be eliminated only by vaccine, for which everybody is waiting. Another sector which we are looking at and which we would be incentivizing is the textile sector, because it employs quite a large, huge number in India and particularly in Maharashtra. So a lot of, there are some issues like a lot of exports from India, it go to European market, and then it goes to US market. So that has been hit now, but things would pick up because in Europe, they don't have that kind of a choice to grow cotton. So that is one market which is readily available, but because of this corona issue, uh, it has reduced down, but I think it would soon pick up. So that should be good news for the textile. We are, it, as I said, that it employs a lot of people and gives employment to so many. So therefore, we are thinking, we are in, there are some incentives in the pipeline for the textile. Another sector which we will be looking at is agro processing sector. And as I told you that this is going to be a very good year where there would be a good monsoon, and our Honorable Chief Minister, he has already focused, apart from Corona, already instructions have been given to the local authorities down below the line that we need to focus on agriculture, because it is also one of the largest employment sector. So where, now the agriculture activities would start, the labor would go, they would get money, and it would start slowly and slowly, the rural economy would start growing. That is what I feel like, because government of Maharashtra has gone ahead and provided almost a $5 billion package for the farmers. So where we have done away with the loans of the farmers. So I think that would also act in a very favorable manner for Maharashtra. And then of course, we have this IT, a lot of IT units in Maharashtra, specifically if we see Mumbai and Pune zone. So we have a lot of IT parks there. And during this Corona crisis, I am very happy to say that these IT companies, they have been working from home. So there are some new learnings also because of this crisis. And now I think the IT sector in Maharashtra and that too in India would pick up on certain specific IT products. For example, I'd like to tell you that there is a lot of talk about data mining, which has been going on since few years. So now data centers, which are already there, some of them in place in India, some of them in Mumbai as well. So these data centers would be now another thing which we should look at. There would be many data centers which would possibly come down to India, and because we are talking about data analysis, and then we are talking about AI. So all this clubbed together with there would be different models now that would be coming up, and with artificial intelligence based on this data centers, data analysis, I think there would be some improvements in the businesses as well, because AI, as you are aware, can also be used in auto sector as well. So these kind of things are going to come. And another industry which I find very interesting is entertainment industry. In India, specifically, we have Bollywood in Mumbai. So now people may not like to go to movies also. So what they would do is they would try to see the home entertainment would increase. The gaming industry, of course, would increase quite a lot. So these are the things we should also look at, and these doesn't require much investment. So MSME, new entrepreneurs, they can now think of all these small things, and maybe they can they would be one, if they concentrate on these like cloud computing, data servers, and then cyber security. So these are the areas which which young entrepreneurs should look at. And of course, logistics and e-commerce is on increase now. So anything that comes to our mind with some kind of a good idea on how to sell anything online, or how we can take our services to the doorsteps, I think that is one area which has a lot of scope in India, and particularly in Maharashtra. So this is to give a small overview about what as a government officer I am thinking of. And of course, we will be concentrating, government of course would concentrate on supply side as well as on demand side. So it has already been told that RBI very recently has cut down this reverse repo rate also. So it has been cut down by 25 basis point to 3.75% only now. So this has certainly increased liquidity adjustment facility in the market. So there is money available in the market, and government is thinking that we will have some policy changes for MSME sector particularly, of course for the large units also, but particularly for MSME sector. And we would be very soon coming out with some kind of interest subsidy to MSMEs. And we are also trying to think about an idea if MSME and other mega projects also, if they can get 20% of whatever loan limit they had, 20% extra. And if we can bear the interest cost of that. So that is one area which we are looking at. And we are also trying to see if 2 months of salary payments, if it could be shared between MSME and government. So these are ideas which are being thought about. Maharashtra government has come out with rupees 2,000 of aid to 12 lakh construction workers. So we are also thinking like if we can go ahead in next month also on that, so that we take care of labor force also, and we take care of these small units, MSME particularly. And we are also trying to see if we can give some kind of energy benefits, energy bill benefits to MSMEs. And for the fresh investment, I think, as I said, that it was also said that there would be FDI which would be coming in India, because if we compare with other countries, India is, as of now, could become a manufacturing hub for everything, just like China. We also have that kind of a potential. So these are things which I thought I would highlight, and I've taken some more time, so sorry for that, but thank you. I would end up here. Thank you so much.
Thank you so much, Dr. Kamble. I would now like to just inform you very briefly that the Directorate of Industries is a nodal agency to monitor and implement and develop schemes for the promotion of industries. Dr. Kamble's office is involved in various policies and industrial policy and various incentives which are given to MSMEs and women entrepreneurs, and we have always worked very closely with them. So thank you so much, Dr. Kamble, for a wonderful presentation. And now we feel there's a lot of silver lining to the entire calamity that has enveloped all of us in the last 2 months. I would now like to request Dr. Shuklar to take over and moderate this next session. Thank you so much. Thank you very
much. Thank you so much, Dr. Kamble. That was very comprehensive and quite useful, especially the sectoral stuff that you spoke about was very helpful. What I'm going to do now is probably ask a couple of questions to both Dr. Koopman as well as Dr. Kamble, and then we can throw it open for Q&A from the participants. So Dr. Koopman first. Dr. Koopman, can you hear me? Dr. Koopman?
Yes, I can hear you.
So there is this interesting facet of globalization. I mean, we've seen it undergo several phases, right? There was this hyper globalization, and then some people coined a new phrase lately saying we are going through a slow recession. But do you think COVID-19 has added momentum towards deglobalization? What is your take on that?
Well, thanks, Dr. Shukli. I think it's a complex question. My initial reaction is that we're going to see COVID-19 change globalization, just like we've seen globalization change over the many decades since the Industrial Revolution. So what I expect to happen is some diversification of supply chains, has been pointed out by you and Dr. Kamble, that there's been a lot of concentration of those supply chains in China. We've already observed with the US administration's trade policy actions, many firms already diversifying their international supply chains. What we have not noticed very much is what I would call reshoring. So I have not noticed in the data a lot of firms deciding that they're going to bring their production all onshore domestically. Instead, what we've seen is realignment of global supply chains, increased fragmentation of supply chains, with probably a little bit more emphasis on nearshoring, where the supply chain comes closer rather than back onshore. So I think what we'll see is, if you can recall that first chart I put up with that fast-growing trend, which reflected that hyper-globalization period of what we call the long 1990s, and then the post 2008 financial crisis, I think we'll see something closer to the trend of the post financial crisis trend, but a little bit higher, actually. Once we can resolve, and I don't know how long this will take, once we can resolve the trade policy uncertainties that we observe right now with, say, the US-China trade conflict or the US-Europe trade tensions, and we deal with the health crisis around COVID-19. And I think one can look to the security crisis that we observed in the early 2000s, particularly after the US 9/11 attacks. We saw it took some time for security procedures to start to refine how they were implemented and lower their transactions costs. So how long it takes for those things to work through the system, I really can't say. But I do not think we will see deglobalization. I think we'll see a realignment of globalization. Thank you. I'll stop there.
I think that's a very interesting point that you made, realignment of globalization. Staying on with the topic, Dr. Koopman, since you mentioned China as well, that seems to be somehow hogging the limelight for the wrong reasons. But we have typically seen during pandemics that the world typically comes together. There is global cooperation. But we are seeing for the last several weeks that US and China are actually moving towards some sort of a conflict. You can see those raised pitches in those press conferences. How do you see this impacting you've already covered GVCs, but say bilateralism, multilateralism, and overall trade dynamics? Because one of the things that you mentioned was that we need to resolve some of these trade tensions. And unlike the past, where the world has come together and has cooperated, we are actually seeing the opposite. Where do you see this going, and what impact will it have on trade, therefore?
Well, thank you, Dr. Shukla. That's a tough question. I'm not a geopolitical strategist for sure. I try to stick to the economics, but there is a strong economic case for cooperation. However, economics usually does not drive politics, whether it's domestic politics or I should say economic efficiency and economic effectiveness. Doesn't drive domestic and international geopolitics as much as someone like I might hope. I think it's going to be critical for large players in the global economy, such as the US, China, EU, India, to come to some sort of common understanding as to what they see as these global commons kinds of problems and agree on reasonable approaches to solving those. Climate change is lurking out there in a very big way, and that's going to need some sort of cooperative solution. And it's going to take the large economic countries to come together and decide that they can work together to solve these. But I don't have a magic answer as to what those solutions might be. And I would certainly say that there's no magical solution. It's going to take hard work and compromise for countries to decide to take these cooperative steps. I'll stop there. Thank you.
Thank you, Dr. Koopman. That's very helpful. I will probably move on to Dr. Kamble in the interest of time. Dr. Kamble, you made a mention of several of these steps that the government of Maharashtra has taken to attracting FDI. And I think the most common refrain these days is, and as Dr. Koopman also mentioned, there is going to be some sort of a shift. And like I mentioned, the Japanese government has come up with a fund of $2.2 billion to get industries out of China. How will government of Maharashtra attract FDI to the state from some of these foreign companies wanting to relocate from China to India?
Yeah. Thank you, Dr. Shukla, actually. And I am very happy to share with you that Maharashtra, as I said, that we call Maharashtra as a magnetic Maharashtra as far as industries are concerned. That is because a lot of industries are there, and 30% of the total FDI in the country is in Maharashtra. So that is a preferred, Maharashtra is a preferred destination, and there are various advantages of Maharashtra. But I will not go into that detail. But what we are going to focus on is, as I said, that auto sector is one area which we are looking at, and a lot of investment, specifically in electric vehicles. We would be seeing a lot of investments, and I'm very happy to share with you all that Great Wall Motors, which is one of the biggest automobile companies of the world, they have already finalized to start their production, to invest and start their production in Maharashtra near Pune. So that is one good news I would like to say. And they would also like to go into electric manufacturing of electrical batteries as well, and of course electrical cars. So for your information, they have not cancelled their plan because of this COVID. So that is a good news. So such kind of a companies which we are looking at, the bigger ones, so that our MSME also develop side by side. So we offered them, normally we would offer them quite a special package which would ensure that whatever investment they would invest in Maharashtra, they would get at maximum what we give them back is about 100% of their investment. And that we are managing that through the taxes which they pay. For auto sector, so this is what we are going to do. We are hoping that a lot of companies, and there are some talks going on that some Korean companies are also trying to come over here. And then we have developed very good infrastructures, not only in Pune and Mumbai, but also we have better industrial infrastructure available in Aurangabad also, that is coming up quite nicely, and in Nagpur also. So wherever they are comfortable with, so they can get a land of their choice and it was mentioned by Mr. Kalantri that ease of doing business would be one thing. So that uh, uh, that is being taken care of by us, because I am commissioner industry, as well as I am also looking after ease of doing business as well. I am coordinator for the whole of Maharashtra. So things are in like under one roof only over here. So that is one another area which we are looking at, and we will incentivize is textile and pharma. Pharma, we have a big like we export around 1 lakh crore of rupees of drugs from uh, Maharashtra to whole of the world. So that is, we would be looking out for pharma parks now, and here also for FDI we are going to have special packages so that they would get best of their investment, and all this would be our financial incentives would be based on gross basis, so that gross and net when we compare. So in if you get incentives in net, then you get only 33% of returns, whereas in gross you can get up to 100% of whatever your fixed capital investment is. So that is why I am saying that Maharashtra has a very attractive policy. We were not able to market it quite nicely because of all these issues. We had elections and now this corona, but very soon we would have a full plan to market it, go to where to attract FDI. We are going to go to different countries and do our roadshows over there, and also just like Magnetic Maharashtra, wherein we had called it was an big expo for all countries to come together and see what Maharashtra has to offer. That kind of a big initiative also we are going to take very soon, possibly in November, so that we can showcase ourselves and we can attract a lot of FDI. Another area where we are looking at for the FDI is Mumbai is economic capital of India. So fintech is one area where we are very much interested. We are looking for IT sector, e-commerce, and as I mentioned, data center is the new thing that we are looking at. And in our new policy, we have said that we want to make Mumbai as a data center hub of the world, because the undersea cables also they are here in the new Mumbai area. We are also coming out with a new airport facility in Mumbai. So all this together, let it be a original core manufacturing activity or software activities like data centers. We are almost ready for it. After this period is over, after this crisis is over, we will market ourselves very well, and we would be keeping our number one of FDI.
Thank you so much. It's very heartening to know some of these measures that you spoke about, ease of doing business, attracting FDI. Dr. Kamble, there has been this issue on, so while the RBI has tried to address the liquidity situation, which hopefully eventually take care of the working capital issues and problems that industry and entrepreneurs may face. Are there any steps that the government is looking at to get back migrant labor post the lockdown period? Because a lot of people are suspecting or are apprehensive of not getting labor once the lockdowns are removed, or we get back to normalcy. What is your take on the labor issue? I mean, how do we get back migrant labor back into Maharashtra?
Yeah. So we have, as I said, that we have a big industries over here, and a lot of migrant labor, of course, is here. But having said that, let me also tell you that we have been taking care of laborers who are already in Maharashtra. As of today, we have around 3.2 lakh migrant laborers who are camped, and they are provided food in Maharashtra. And out of that, 80% are from outside states, but still we are taking care of them. Some of them, you are very right, some of them have already left. And our steel sector has a lot of migrant laborers from other states as well. So we already had a kind of video conferencing meetings with our steel sector associations, and we are trying to sort out these issues. We are giving them permissions to bring this labor back, but we are also saying, as I said in my first opening remark, that health of public is of prime importance. So we are also we came out with an online portal where these industries can get the permissions, but they have to maintain certain kind of health standards. So that after that only they can bring these migrant laborers, and they have all agreed to these measures which are being taken by the government. And I think they said that if we are opening up industries, steel sector, textile sector, which has around not much but around 25% are the migrant workers, mainly from Maharashtra only. So they are saying that they would like to open, and we will see. As of now, today 6,500 units in Maharashtra are already open, and although the number of employed labor is small, but slowly and slowly this is increasing. We already have around 4,000 applications more on our portal where a decision is being taken. So this issue of migrant labor, I also mentioned that for 12 lakh laborers we are giving some money from the government funds. So this being the situation, and Maharashtra has always treated this laborers very well, I think it should not be a big problem.
Thank you so much, Dr. Kamble. I'm looking at the watch as well, and I have multiple questions of my own, but I think I won't be greedy, and let me throw it back to the audience here. I think we can have some questions, so we throw it open for Q&A from members or people on this. So back to you.
Anil, who's getting the questions?
Ma'am, we need to check the chat box. There are few questions in that.
I think
So
you
maybe
should
you
check
can
because
check.
I don't know where to go to.
Okay, fine. Okay, so I will ask the questions. There is a question for Dr. Kamble.
Yes.
Can you throw some light on schemes or avenues for textile manufacturing sectors related to MSMEs?
Sorry, can you come again? Can you come again?
Yeah, can you throw some light? Can you give little elaboration on schemes for textile manufacturing sector related to SMEs?
So you're talking about the incentives to them?
Yes, sir.
Yeah. So if it is a new unit, and so we have some textile parks already in Maharashtra, like in Amravati we have, in Solapur we have, in Kolhapur we have, so in Nagpur we have. So there are numerous textile parks in Maharashtra. So if you want to like invest or you want to start new one, so in Aurangabad also we have. So you have to look out for these places near you. And this is all available on our MIDC portal, that is Maharashtra Industrial Development Corporation portal. The incentives which we are for MSME in textile is that there are two subsidies which are given by government of Maharashtra. One is from textile department. So that helps you whatever your investment in machineries. So that is also being subsidized by textile department. Whatever is your fixed capital investment, so that fixed capital investment, we give a financial incentive based on your fixed capital investment. And textile is a sector which we always look for because it is one of the largest employment generator in Maharashtra. And therefore, and all this our incentive, these are like you get 5% of interest subsidy also on whatever loan that you take. All these incentives are available on our website, that is maitrimahaonline.gov.in. So therein you can get all this information of more in details. And if there is anything, please send us an email on Maitri. We'll revert back to you immediately.
Thank you very much, sir. Another question for Dr. Koopman. Dr. Koopman?
Yes, hello.
Hello. Yeah, Dr. Koopman, one question is that while many countries are becoming protectionist and there are increasing instances of trade barriers, how will WTO ensure that the virtues of globalization are protected?
Well, thank you. I think one of the main roles that the WTO plays is transparency. Members have the opportunity to come and talk to one another about what is happening with each other's trade policy. They also provide notifications to the WTO about changes in trade policies. So that's one area where I think the WTO plays a very significant role. The other area is around certainty. So a lot of the value of the WTO is that trade can occur predictably and transparently, so that you know what the maximum tariff you might face might be. You know that the sanitary and phytosanitary rules or technical barriers to trade are transparent, made available, understandable, are science-based. Those may not seem like big things, but when you look at tariffs compared to the costs of moving goods across borders, tariffs are actually a relatively small share, although one that is truly actionable by governments. But tariffs represent a small share of the total trade costs of moving goods across borders. So this notion of certainty, you know what the maximum tariff you're going to face is, and you know what the rules will be, and transparency around changes in those really keep trade costs down. And our research on this suggests that these two aspects are probably a very important contributor to reducing trade costs over time, perhaps even more important than the reduction in tariffs. Now, both of those elements, this sort of transparency, certainty, and tariffs, all play important roles when it comes to micro, small, medium-sized enterprises engaging in trade. It's much easier for larger firms to overcome these trade costs and understand what the rules might mean. So I think there is a very important role for the WTO and governments to come together to find ways to make sure that this transparency, this certainty, and that these tariffs don't impinge too much on the ability of micro, small, medium-sized enterprises to engage in the global economy more broadly. I'll stop there. Thank you.
Yeah, thank you. Thank you very much, sir. One more question is that free trade agreements, is this an opportune time and regional trade agreements? Dr. Cooper?
Yes, I'm sorry. I did not hear the question. It was there was some technical issue.
Yeah. So is this an opportune time to take advantage of free trade agreements and regional agreements from the India's point of view?
Well, I think there's a general philosophy, never waste a crisis. And we certainly heard Dr. Campbell talking about ways that India could take advantage of the current circumstances and this restructuring of global supply chains. I do think that India should engage proactively in the trade area. I think India has significant domestic concerns that it tries to balance against opening up. But I consider myself a scientist, and one of the fundamental scientific underpinnings of the kind of work that I focus on, international trade, but this also applies to domestic trade, and that's comparative advantage and specialization. So Ricardo and Adam Smith had very good insights. And when you think of how a business operates, it usually is hiring people that are particularly good at certain things, and they have those people focus at what they're good at. They try to produce goods and services that they're relatively good at. They provide those domestically, but that specialization and focusing on what you're relatively good at in order to maximize the output that you produce applies globally, not just domestically. And that's where the WTO comes in and can really help with helping countries focus on what they're good at. I'll stop there. Thank you.
Thank you. Thank you very much, sir. The next question is to Dr. Shukla. Dr. Shukla?
Yeah, hi. I'm there.
Yeah, hi. So the Mahindra Group has operations in more than 100 countries and works extensively with a lot of vendors, including MSMEs. So in the next recovery or growth phase, how do you see the relations with MSMEs evolving, or what could be the new opportunities for MSMEs to work with the groups or the big organizations like Mahindra?
I think that's a very wide canvas. And as we recover from the crisis and as we see demand really normalizing, and then the alphabet soup that I spoke about, once we hit that V-shaped recovery in 21-22, I do think the role of MSMEs especially and the entire supply chain, I mean, all partners that we work with will go up immensely. And I think it will also be horses for courses, right? I mean, we will have to look at the individual partner, individual MSME or the vendor, because each country operates in a very different dynamic. Although, like Dr. Cookman said, we do have to go through some of these uncertainties in terms of policies and transaction costs. But I think we will have a policy, and we do have a policy of using horses for courses. Going forward, I think this will only expand in terms of a mutually beneficial relationship. It should help enlarge the offering bouquet of the group, as well as enhance the beneficial trade-off for the MSMEs as well. But as of now, I think we are going through a tough time. I mean, the whole economy, the industry, etc. But I'm very sure that we will soon have seen the worst of it and will come out of it together pretty soon. Thank you.
Thank you. Thank you very much, Dr. Shukla. Now, a last question for Dr. Kamble.
Yes, please.
Yeah. How can the rising unemployment levels be kept in check by the government? And what is the role of individuals in reskilling themselves?
Sorry, what is the role of individuals in?
Yeah, first part is that the unemployment levels, how they can be kept in check by the government. And secondly is that in this situation of higher unemployment, what are the government plans to reskill these employees or these professionals?
Yeah. So, of course, this is a little difficult question to answer because the situation of employment right now is not so good. But having said that, I feel that as a policy maker of the government is now going to invest quite a lot in infrastructure development. So, for example, if government infuses some money in infrastructure projects like National Highway, so then as I already mentioned, so that steel industry then starts rolling in. So such kind of infrastructure investment by the government is going to be there. And then I also mentioned that there are new businesses that are going to start. So government is thinking on these lines that to start infusing more and more in the infrastructure so that industry levels are maintained, their production levels are maintained. That is one. Second, government is also thinking about how to raise the demand. So for that also a big kind of package that is being thought of. So I would not tell more details on that here, but that is also in the pipeline. Government is thinking of going for a very big skill training for the new businesses that would come up. So we have actually already started for like cyber security kind of a things, or data centers kind of thing, or artificial intelligence kind of a courses that we already started on. So from this crisis, there would be new areas that would be coming up, and skill development in that area, because there would be a lot of jobs developed in those areas. So that is one sector which we are looking at. And as I mentioned, that agriculture is one of the priority, because we also have to look at the rural area, and there agro processing units, we will help, government would be helping for these agro processing units on a very big scale, I would say, so that rural employment is also being taken care of. So that is what I can tell you now. But as Dr. Shukla also said, that this is a difficult times. Everybody has to support one another, because by protecting oneself, one protect others. As has been said by Lord Buddha, that attana rakkanto param rakkanto attana rakkati, meaning by protecting oneself, one protects others, and by protecting others, one protects oneself. So let us help each other and come out of this crisis, just like human beings came out of other crises like 2008, 2009 crisis of economic crisis, or may it be a plague of 1918. We came out victorious. This time also, with everybody's support, everybody supporting everybody, we will come out of we will be victorious in this also. Thank you.
Thank you very much, sir. And with this positive notes, due to the non-availability of time, I will stop here. And now I will request Dr. Shukla to summarize the session, please.
Thank you so much. I think we've had a fascinating discussion, not just in terms of the coverage. I mean, we've covered the world trade, countries. We spoke about India. We spoke about the government of Maharashtra and the kind of things that the government is doing. So it's been extensive. One of the other things that I want to highlight is when you have two economists, you get 20 views, right? But here we didn't have that, fortunately. We were all agreeing on some of the broader elements. And I think a couple of points that Dr. Koopman mentioned are very important. I think we need to realize the cost of trade, right? We need predictably, coming from the private sector, I can vouch for that all we want, I mean, typically any investor, entrepreneur, producer wants is the certainty in terms of policies, tariffs, and things like that. The other thing that he mentioned was the NTBs, non-tariff barriers, which is very, very important. And you have to go through a lot of those. And also he mentioned Ricardo and Smith, which was music to my ears. So thank you, Dr. Koopman, for that. And I love the point that it's not deglobalization, but most probably a realignment of globalization. As for Dr. Kamble, I think you had that wonderful quote from Lord Buddha, and that really sums it up very well. You also told us a couple of important things, what the government is doing, especially the labor part. I'm not sure that most people on the call would have known what the government is doing for labor. The 3.2 lakh numbers that you spoke about, the fact that the government is trying to make Mumbai a data hub going forward, and the kind of things that you're trying to do for auto, steel, textile, and pharma. So with that positive, I think everybody's enjoyed hearing these gems from the gentleman on the call. Thank you so much for your time and your views. Thanks once again.
Thank you, Dr. Shukla. May I now request Calamity sir for the final closing remarks, please?
Thank you, Dr. Koopman, Dr. Kamble, Dr. Shukla, for lucid expression about our economy, international economy, and Maharashtra state. I think everybody was looking to hear the different views so that they could plan their forward looking industry, trade, business, and opportunities, what they can do. And they could also get convinced that this is the future, this is what we need to do, and this is how we have to balance the future. So thank you very much, and thank you for being with us. Next week, we are going to have Mr. Piyush Goyal, our Minister for Trade, Industry and Railways, and also Mr. Hardeep Puri, Minister for Urban Development, Civil Aviation, and also Trade and Commerce. So we'll let you know the details soon. So we look forward to your all participation in that also. Thank you very much, and thank you for your very much for spending your valuable time. I know everybody has sometimes not office, but a lot of things to do and a lot of communication to make. So this is a good
I'm in
thing
office.
that you could make it and be with us. Thank you very much.
Thank you so much.
Thank you. Thank you so much.
Thank you.
Thank you, sir. Thank you.
Thank you. Thank you with this.
Thank you.
Thank you very much, everybody.
You can
This
see almost
conference
all
will
the
now be recorded.
The presentations to me.
It was really a
Anil?
great experience.
Yeah, we should give all the presentations. Anil, put them up on the website.
This conference will now be recorded.
We can make the summary and put it on the website.
No, but we have
Yes,
these
sir.
presentations. They're very interesting.
Presentation is